Ladies and gentlemen, fellow patriots and freedom-loving Americans, welcome back to another episode of The Source, Rule Breakers, Lawmakers, and Influencers. This is The Source, where rules get broken for the greater good, laws get made to serve the people, and influence drives us forward. Today's guest is Julio Gonzalez, CEO and founder of Engineered Tax Services. Welcome, Julio.
Thanks for having me, Will. This is great. I appreciate it. What a great setup.
This is round two.
Yeah.
Right. So we had our first episode today, which is a few weeks ago, which was all about the big beautiful bill.
Yeah.
And the tax changes that you had advocated for, and then it wound up into a wide-ranging discussion about how the tax code can help support businesses, as well as the intention of the tax code, some of the benefits that you had advocated for that were brought back and made permanent in the tax code from Trump's first term.
Yeah.
Right.
Yeah.
And so getting back the 100% accelerated depreciation.
Thank goodness.
And the R&D tax credits that we had talked about in the last episode. But Julio, you recently authored an article, an opinion piece on Fox News about how the IRS continues to go after the small taxpayer and not the big taxpayer. So you want to tell us a little bit about your article and what's your perspective?
Yeah, I think, Will, having one of the largest tax firms in the country, and we work with thousands of accounting firms and their clients, right, on tax credits and tax incentives. So obviously we're interacting with small businesses all the time, and we're generating tax reports for them that they can use for their tax returns. These programs that are in the big, beautiful bill, right, that help our small businesses and the owners stay competitive against international business, right? So now, when Biden was in office, he said, hey, let's get 87,000 agents, right, IRS agents, let's add them and go after the billionaires. Well, he didn't go after the billionaires. He went after the small business owners, right? And I think that was because those are quick wins for the IRS. Because why I wrote this article is some of these tax credits we do, they're black and white. Yet the IRS audits the small business owners, I think, to get an easy win, right? Because that's how the IRS agents get performance. Like how much money did we get back?
Okay.
Right? So and then they didn't go after the big businesses, right? Because that's a hard victory and it takes a long time, right? And, so they got to get wins. And unfortunately, I really feel like in the Biden administration, they just weaponize these agents to come after the small businesses because they fold right away. Well, they're like, okay, I guess not. And then they become scared to take a tax benefit that is in the code that's for them. And it's horrific, right? Like they're so scared of the IRS.
Yeah.
And the IRS typically should be our friend and help us, right? And be, the agent that's going to make sure that we're taking things right, but we're taking advantage of these. Because the IRS should be promoting these things and how to do it correctly and not be scared. But, that's not what's happening. And why I wrote the article, Will, is because these agents are still hanging on to these cases, right? But how does the new administration know this, right? So I wanted to create some discussion about that.
Yeah, you mentioned in the article how President Trump, stopped the hiring of those 87,000 agents, thankfully, and how he's streamlining the IRS through DOGE. And then you mentioned two gentlemen that were promoted into oversight over the IRS.
Yeah, and this week, now we have a CEO for the IRS. So now Scott, U.S. Treasury, right, put Frank into that position. So now maybe we have some, control there. Now we have people that are looking into this, right, and running the IRS now. We had it's tough when a new administration comes in, right, and then you're overhauling different offices. But I think now we have a leader there. I think Scott's doing a great job as U.S. Treasurer, and now that we have someone in as CEO of the IRS, now we can start to have this dialogue and maybe fix these things. I think it'd be a great win for the administration too, to take these IRS agents and get them off these small businesses that have the right to take these claims.
Well, is it just small businesses, or is it the small taxpayer? You reference in the article about Biden touted, oh, people over 400,000 are the ones that they're going to be going after. But are you seeing it that it's really people that are under 400,000?
Yeah, I'm saying both for sure. And so, yeah, we're seeing these businesses that maybe $1 million and maybe the net to them is 200,000, right? 100,000. So, but what we're not seeing is the same tax credit being looked at in the large business unit, right? Which is the Fortune 500 companies, big private equity firms. Like, so what's the discrepancy? Why do we have that? Why do we have this unfairness?
Well, I mean, you reference in the article that the small taxpayer, the small business owner, can't afford the lawyer and the accountant to defend them.
Nor do they have the time.
Exactly.
So they have to fold.
It's funny, years ago, I worked at Merrill Lynch when I had my first start out of college. And a gentleman called because he needed all of these bank statements from, all the years. And he is like, do you know who the IRS is? And I said, yeah, they're the people who collect taxes. He's like, no, they're the people who destroy your life.
Yeah.
And so, to your point, that the small taxpayer is typically ill-equipped to provide the level of documentation and also to know what their legal standing is in terms of what are they allowed to question the IRS about, right? If the IRS sends you a letter with a series of questions, right, then you would, especially if they're announcing that you're under audit, right, you would definitely want a lawyer and your accountant to be working together to respond to the IRS rather than just responding on your own.
Yeah, and it's terrible, though, Will, because they send those out, but they're not 100%, right? The IRS, they're just fishing, right? And typically, it's not blatant. And so what happens? They send the letter. You have to go get the accountant. You have to go get the attorney to represent you.
Yeah.
And then you have to take up your time and have all these expenses. And then at the end, they might say, oh, yeah, you're right. But you're right $200,000, $300,000 later, right?
Right.
And that's, how is that fair? I mean, it should be like a criminal. Like, okay, if it's blatant, let's go into that investigation with the client. But if it's not, if you can't know for sure, then why put us through the ringer and the expenses? I just think we should have a different approach. Instead of, hey, let's just toss this out. Let's put out this wide net and make small business owners fold because they just don't have the time or the expense to do it.
How many businesses do you think are folding versus how many business owners are just saying, you know what, it's not, I don't have the time, the expertise, or the money to pay. You say I owe you $40,000. Let's work out a payment plan. I'll pay you $40,000. Like, what percent do you think people are folding and just saying to the IRS, okay, you must be right, versus saying, hey, I really need to consult my accountant and a lawyer?
I think 80% fold right away.
Yeah.
And then 20% are like, well, let's get into this. But then eventually they fold too, right? Because they realize the economics of it all. I talked to this guy last week here in Palm Beach County, and he's having the same issues, right? And it looks to me like everything's black and white. But now he's $80,000 into it, and he's like, I got to file bankruptcy. Like, I'm a small business owner. Like, I can't fight this. Like, I simply can't fight it. And, and they're assessing all these penalties, and now you have to look at bankruptcy for your business. I mean, and he employs 4 people. Yeah. He's doing great things for this community. But this is the stories that we see all the time.
Yeah. Interesting. So are you seeing this in terms of people who use various tax strategies that are maybe not sort of mainstream tax strategies, or are you seeing it as just a blanket kind of scatter approach where the IRS will, if you have a small wallpaper business and you just are taking your normal and standard deductions, your vehicle, your gas,
I'm seeing with them too. Yeah, I'm seeing.
So it's not the people that are doing cost segs and other types of advanced strategies.
It's all of it. It's across the board, right? And and I think again, the Biden administration just wanted to weaponize. And they said the billionaires and the hedge fund and the private corporations, but that's not really what happened, right? Yeah, they do it after everyone. So send all those agents to the border, get rid of them. I mean, this is such a drain on the economy.
Well, they armed them, remember?
Yeah, they armed them, right?
They armed them. They had bought massive amounts of ammunition for the IRS agents.
Yeah.
So, definitely glad that Doge, got in there.
Yeah.
I definitely feel that there isn't. One of the things that needs to happen at the IRS is their systems and technology needs to be updated as well, right? Most small businesses use QuickBooks, right?
Yeah.
I heard that the IRS doesn't use QuickBooks or have access to QuickBooks or can operate inside of a QuickBooks program.
I think what you're saying is right on. Why not use AI and technology to really find the people that are taking advantage of the IRS and the system, and then go after those people? Make it like so obvious, right?
Yeah.
Technology could solve this in minutes, right? Technology could look at a tax return and know immediately what's going on,
right?
And then find the people that are really taking advantage of the system, and then not go after the people with a wide net, hoping to find something and cost these businesses their companies that they've worked so hard to create.
Well, and the funny thing is that if you look at a small business in percentage of tax that they're actually paying compared to a larger business, there's more money for the IRS going after the larger business than there is for the smaller business on a dollar for dollar basis, right? If you've got $10 million worth of revenue and you're paying yourself, $1.2 million a year, right? There's more fat there in terms of a taxpayer win than going after the $400,000 gross wallpaper hanging company.
No doubt.
That, has $80,000 in compensation.
Yeah, no doubt about that. But let's be fair to everyone. Large business owners, small business owners.
Yeah.
And let's use technology. Let's not, take a guess and put people through hardship. That's all I'm saying. I want tax.
Yeah.
And I'm all for the IRS, right? I think there are abusers and people that take advantage of the system. We saw that with the employment retention tax credits, right? A lot of abuse.
Yeah.
We see
even
it
the PPPs.
Yeah, we see a lot of abuse. Those people should be sought after and convicted, right? And pay back the country. But let's use technology and find out when there's really abuse. But it should be equality throughout. But let's not focus on the small business owners because they don't have the ability to fight.
You made some interesting points in the article about creating transparent metrics, right? So if the IRS published and said, okay, for each tax bracket, we're going to do 1% audits on each tax bracket. And so that works out to be, I'm pulling numbers out of the air, right? So let's say it winds up being 50,000 audits for and I don't even know what the tax bracket is, 23% tax bracket, 50,000 audits for the 25%, 50,000 audits for 30 to 50, right? Some sort of clear and transparent metric of, this is one in every, 250,000 returns get an audit, right?
Yeah.
And to your point, you had also said about them publishing the results of the audits, right? So what's the success rate, right? Now, if you said, okay, we're going to do 50,000 audits per tax bracket, right, of American taxpayer, but we're finding that 96% of people don't owe us money or made a mistake in their favor, right, that they're entitled to a refund, then you would be backing into and saying, okay, well, is the whole audit process even effective and successful?
I love that. I think transparency is so critical. I think we should publish that. I think we should have transparency when we're being audited and being told what it is and what created the audit. But we don't get that.
Yeah,
and we never know, going through it for years, where we're at.
Right.
And, there's no judge and jury. Basically, they're the judge, they're the jury, and they're not transparent.
Yeah.
And we all deserve that transparency. We all, we're hardworking. We fund the IRS, the taxpayers.
Oh, yeah.
Why can't we, have transparency? We're paying the salaries.
And so what does ETS do in a case of a client who may have used cost segregation or an R&D tax credit to help them in a scenario of an audit?
Great question. We fight for them, right? So we do that at our cost because I don't want anyone to lose. I don't want a small business owner to lose because, when they lose, then the IRS says, okay, we have precedents, right? We like this person lost, so now we can just apply that same application to all these other clients. So they don't have the ability to fight for themselves, but I'll fight for them, and I do fight for them, and I do every day. And most of the times we prevail. And sometimes we go up to U.S. tax court and beyond. We can't allow abuse, and although that's part of our cost, it's a good investment, right?
Yeah. And so just before we forget, how do people reach you? What's your website?
Yeah, well, thanks. Yeah, Engineered Tax Services is our website. I'm at Tax Reform Expert on all social media and always putting out tax tips. Tax tips for your small business owners, grants that are available for the small business owners as well. So, yeah, thanks for letting me share that.
Yeah, no problem. Now, I remember way back in the day, I used to work in small market 401k, and there was a publication that we would reference, Tax Facts. Does that still exist?
Yeah, yeah.
So if an individual, you can correct me if I'm wrong in my recollection of this. Let's say an individual has an issue with the IRS, and they go to court, and the IRS finds, or the judge issues a ruling, right? Whether positive or negative to what the case was brought about.
Yeah.
Those rulings go into Tax Facts, right?
That's correct.
And then taxpayers can rely on those previous tax rulings in either their justifications for certain expenses or in certain strategies that they may employ in filing their taxes, right?
Yeah, it's a great resource. Even, some of the AI like ChatGPT or whatever, you can put some stuff in there as well. Now, when you do that, make sure you're specific to the times, right? Because I see that it picks up tax code from previous years that's not applicable today. But
So
I
you'd
think
say referencing the most recent 2025 version of the tax code.
Yeah, I think that's real important. Otherwise, you do get a bunch of information that's historical but not accurate.
Okay.
So we got to be careful. But Tax Facts is great too.
Yeah. Awesome. So you also recently wrote a book, Why Billionaires Love the Tax Code. And so, you and I had talked about this on our last episode of how the tax code was really written for people to be incentivized to produce in the economy, right? You can pay as little taxes as possible if you're operating a business, if you're employing people, if you're somehow harnessing that entrepreneurial spirit and contributing, not only to the country, to your community, et cetera, right?
Yeah. Well, listen, this book was really to help small business owners understand why big corporations are paying a percentage of tax that's much smaller than the percentage of tax the small business owners are paying, right? On average, big corporations paying 11 to 12% taxes. On small business owners, 40 to 50% of their net income goes to taxes, right? And I always say that the government's your partner in business, right? There's no doubt about that. And we don't want them to be 50% of your partner in your profits, right? Because the large businesses don't have that percentage, right? They do much lower, but they use the tax code, which now with tax code, tax law, 2 million pages. How do you keep up? And it changes every year, right? And thank God we made this one permanent, right? But it keeps changing. So how do the accountants even keep up?
And to your point, how does the IRS even keep up, right? How do auditors even keep up with all of the changes that are happening in the tax code in comparison?
It's tough.
So
it's very
even
challenging.
more. It's even more of a reason why resources need to be devoted towards upgrading IRS infrastructure and technology versus enforcement by agents, right?
Yeah.
Because then it would equip the auditor with all of the information that they need from prior iterations of the tax code with all of the new revisions.
Yeah, that's right. And so it's really brutal, right? And it constantly changes, it constantly evolves. And you're right, the IRS then has to take the tax code and kind of take it from gray to black and white, and like, how are we going to use this code? And they're still working on the one we just passed, right? So very tough. And now, we have 70 days left, right, to the end of the year before our taxes are due for 2025. So if I would share anything, like, you can get the book for free, for watching Will's show, text Y to 26786. Cool. Y to 26786, and we'll send you a free digital copy. But this book has 2,000 tips for small business owners on what they can do today to lower their taxes before the end of the year. And there's a lot of just simple things that the accounting firms miss. Like, we're not the accounting firm. We don't do the tax returns. We work with the accounting firms to help them maximize and tax optimization for their clients. So, just pick it up for free, right? And then go through it and find some tips that a lot of people now work from home right? Ever since COVID. And now there's, tax deductions you can take from working from home, using your car now to go to businesses and things of that nature. Just simple things. Yeah. And you're into the pet business. Sometimes the dogs can be a tax write-off.
Yeah, I saw your post on Instagram.
Yeah, so
it's like, if you have a service dog that's fully trained as a service, for a particular service, you correct me if I'm wrong, then you can deduct a lot of your expenses related to the care and feeding of that dog.
Yeah, and you can pay your children, and under a certain amount, they're not taxed, and you get the expense, right? But then they can utilize that for supplies, and it's a good way to raise your children with, having them working at a young age. So a lot of fun tips in there that a lot of people just miss, and a lot of accountants miss. Because the accountants are trying to figure out on their software, is it updated with this new code? Like, they're just trying to process, and they're just finishing up, and finish up 10/15, right?
There's extensions.
And now we got from 10/15 to 12/31 to minimize the taxes for other clients. How can they possibly do that? So use this to get with your accountant and say, hey, can we try these different things?
Yeah, I definitely look forward to reading it and checking it out. Someone gave me advice years ago, and I didn't follow it last year, which is, right around this time of the year, you should be sitting down with your accountant and going through all of your expenses and everything, all of your capital, especially your capital gains that you may have incurred, up through October this year. And then looking at, like, okay, what is my potential tax liability if everything stays the same between now and December 31st? Because so many things need to be done by the 31st. Yeah. Right? And if you don't do them by the 31st, then you could wind up having a bigger tax bill than you anticipated.
It becomes a bigger challenge for sure.
Yeah. So, and that comes into, making retirement plan contributions or incurring certain expenses, right? If your business is showing a lot of profit, maybe you need to invest in some equipment. Maybe it's better to invest in that equipment this year before the end of the tax year to offset, growth or income or whatever that you had incurred during 2025.
Yeah, so it could be, you're right. Do I pay the IRS, or do I put the money into the retirement account? Do I pay the IRS, or do I set up a health savings account? Do I pay the IRS, or maybe I do education program? Yeah. Or so invest in yourself, like you're saying. Maybe we buy the equipment this year and pay ourselves, invest in ourselves, rather than give that money unnecessarily to the IRS. That's all I'm saying. Yeah. Like, at the end of the day, we owe something, right? Yeah. But the IRS rewards us for investing in ourselves. Maybe it's buying real estate. You can buy short-term rentals and get a tax write-off in the first year and take advantage of that. So instead of, taking that tax liability, let's convert it to an appreciating asset. They reward us for investing in real estate. They reward us for investing in ourselves and in our businesses.
Well, and that's the point, right? It's not about cheating the IRS. There are so many strategies that a business owner or even a single taxpayer can employ to minimize their tax bill. Yeah. All that are sanctioned by the code and how it's currently written, that you don't need to really go outside of the box, and especially if you're an average taxpayer, and look at ways to evade, right? Never want to advocate people to evade taxes, but there are so many places in the tax code that you can legally reduce your income and reduce your tax liability.
Yeah, reducing your tax liability, but not reducing the taxes that go to the IRS, right? Because if we save money and we create more employment and create more revenue, then everyone's paying taxes along the way, right? Or you're investing and now you're paying capital gains tax, or you're putting it in the bank and now you're paying interest income tax, right? So actually, all these steps to save money for you, lower your tax liabilities, creates more jobs, creates more economic activity, and ultimately the IRS collects more. So everyone wins. And I think that's the misnomer that no one really thinks about.
Yeah, definitely. You know, we implemented a 401k plan in our company because the tax code came out with a series of benefits that offer tax credits to employers based on a per head basis for the next 5 years. They're also offering incentives in terms of plan costs and administrative costs. So when you look at the tax code, there's many ways that you can utilize the tax code. So that's going to bring down my payroll taxes. That's going to bring down my annual income taxes on my corporation. And I get to do something good for my employees. And, you know, the reality is that setting up a 401k today, because it's tax deferred, now the IRS may not get that dollar today, but they're going to get an appreciated dollar 20 years from now when these employees are retiring. So, you know, it's a win-win for everybody, right? We get tax benefits today, and the IRS gets to collect appreciated dollars in the future.
Right. And then these people with their retirement benefits don't become reliant on the government down the road. So again, another program where if you think about it logically, it really helps out the whole country, because otherwise, they'd be becoming independent. But no, they saved, they put money, you put the 401k in place for them, they saved, and now they don't have to rely on the government when they get older. So kudos for those programs.
One last question for you. So I had another friend who was actually a CPA who advocated to, if you've been with the same CPA for 5 or more years, to consider having your tax return from the prior year worked up again by a different CPA, and see if that CPA found things that maybe your current CPA had missed.
I love that idea. Love that idea. Like, you know, because every CPA is just going to have a little different education, right? And maybe different, you know, how they're updated on all the new tax codes. So what a brilliant idea. Why not get another review? Because all it could do is be either it's going to save you a lot, or you're going to find out he's doing a good job. And I think that's a good investment.
And you know, on a basis for a typical taxpayer, what is that? You know, $400 to $1,500. You know, you may find one of our friends, you know, from EO, he wound up realizing that he missed out on deductions in an e-commerce manufacturing business he had that entitled him to a $1.2 million refund, because there was a look back period that he could qualify for, and his accountant just didn't understand the nuances of e-commerce to really advise him on how to best navigate those taxes.
Good point.
So to your point about what Engineered Tax Services does with cost segregation and R&D tax credits, et cetera, depending on the type of business that you're in, you should probably interview your accountant to find out how familiar they are with those businesses, right? Or maybe find out from an industry trade association, are there any CPAs that they're aware of that specialize in your particular industry, so that you are taking advantage? Like for you, I'm sure you know everything there is to know about real estate tax, right? So if a client came to you and said, you know, hey, Julio, I know you don't file taxes and prepare taxes, but you provide, you know, the tax reports, et cetera, you know, who's the top 5 best CPA real estate CPAs that I should interview to do my taxes?
Yeah, I think it's essential, whatever business you're in, to hire an accountant that knows your industry, because they're going to know all the credits, incentive programs revolving around your industry. I think that's so vital. I also would say take one step more. You're going to have an accountant look at your tax return. Have them look at the last 3 years, because the IRS allows you to go back and fix mistakes, right? So at least go ahead and take it one step further and see, like you said, with that one friend of yours, you know, $1.2 million back, right? He overpaid or whatever.
Right.
Like, okay, let's look at the last 3 years. Did my account miss anything in those years? Because we can't fix those, right? And I think that's great.
And what do you think about, and we'll wrap up here in a second, what do you think about the structure of your business? Meaning, like if your master company is an LLC and you're distributing K-1s, right? It's very important that a accountant, understand your corporate structure in how it's going to relate to your taxes and how the entities affiliated with that structure need to be treated.
No doubt. Each corporation has its own different tax structure. C corporations, 21%, right? And the LLCs are at your personal rate. So there's a gap there. Maybe we want to go one way versus the other. Although now with LLCs and this new tax code, you can adjust the LLC tax rate by 20%. So but you got to do the math. You got to do the calculations. What's going to be better for me? And you also got to think about the future. Mm-hmm. If I'm going to go public, you better not be an LLC. Better not be an S corp. You got to be a C corp, right? So right. A lot of things to think about. But yeah, run through the math. It's important.
Awesome. Well, thanks, Julio. Great to see you as always. Glad we were able to wrap up from episode 1. We'll definitely have you back if you want to come and come back to the source.
Okay.
Rule breakers, lawmakers, and influencers like Julio Gonzalez. Thank you, everybody, for joining us. Don't forget to text, what's the code?
Oh, yeah. Text Y, WHY, to 26786.
26786. Text Y. Get a free copy of Julio's book, Why Billionaires Love the Tax Code, and check out Julio's article that he wrote on Fox News regarding the IRS and what needs to be some changes there to help taxpayers. Thank you so much for joining us. See you next time.